We're live.
We're live. Good morning, everyone. I'm Sanam Solati Yurczyk with New England Prestige Realty.
And I'm Kelly Turner with Total Mortgage.
And we're excited because today we're going to talk about
VA buyers and VA loans, which is one of my favorite topics.
Yes, absolutely. Well, before we even get started, to all our veterans and everybody active in the military, we want to thank you for your service. And
Absolutely. And I think our hope in this conversation is to educate everybody,
yes,
both veterans and non-veterans, about what is a VA loan, what is the benefit of it, why might a veteran use it, because I think there is a lot of misinformation both with our VA buyers and also sellers
absolutely
about this particular loan product.
You actually busted one of the myths for me last week in just our conversation. Oftentimes, like when I represent a seller, sometimes sellers are a little skittish about accepting VA loans.
Yep.
Part of that has to do with the veterans benefit, which they should take advantage of,
Absolutely.
which is the 100% financing part of it. But when a seller takes a look at a buyer's offer, and if they see that they're doing 100% financing, sometimes they get a little gun shy, and they're like, "Well, do they really have any skin in the game?"
And like, is there enough money to really make this transaction work?
Are they qualified?
Or how qualified are they? And that's something we get about all 100% down programs, but specifically VA. And what's interesting about the VA loan product that is different than other loans is that for the majority of other 100% down programs, a person is taking advantage of that program over other programs because they don't necessarily have the cash to put into the transaction. A VA borrower, that's not the case. They're really taking advantage of a military benefit to not put the money down, because for a lot of them, they have the money. It's better serving them in other places like investments or, cash on hand for emergencies. So they don't need to put it in. So why would they? So what we've actually found is that VA loans have one of the lowest foreclosure rates of all loan programs. And I will also tell you, as somebody who looks at loan qualifications all day and every day, VA borrowers are often some of my best qualified borrowers. And some of it is because I was telling Sanam, while debt to income is one of the big deciding factors in all loan products, that is literally money coming in every month versus money going out. The VA program also uses something called residual income, and they have done calculations that say, like, for a family of 3, for a family of 5, after you pay all your bills, including your housing bills, you need to have at least this much money left over at the end every month in order to make this all work. And those calculations are somewhat strict. And honestly, they're very accurate. So we like them more than debt to income.
Well, it's funny because I would imagine many of my borrowers that go through conventional financing where you do consider debt to income ratio, they may not qualify.
Correct. Exactly. They may not hit those residual numbers. So it's something to keep in mind if you're a seller, that accepting a VA buyer, first off, you're saying thank you to a veteran for doing, for supporting us and sacrificing. But you are also choosing a buyer often who is very well qualified. And the loan process doesn't need to be any more difficult or any bigger of a hang up than a regular loan. And I think that's the other piece of misinformation, right? Is you've been doing real estate for quite some time. There used to be a lot of myths and stigmas that, like, what VA loans,
they're not that strong, or there's a lot of red tape.
Or they take a long time.
Oh yeah, they take such a long time. And they can take a long time with the wrong lender. And they can be dicey with the wrong realtor. But if you're educating yourself and or working with a strong team, you avoid all of those things. For example, the VA appraisal. A lot of people think that, VA appraisers are just sticklers. They're just difficult. When in fact, they're coming out and they're valuing the property the way they would any other property. They just have another layer, which is they want to make sure the house is safe.
Yep. Exactly. And honestly, most of the stuff that comes up in a VA loan is things that the buyer really should be thinking about anyway. Missing handrails, potential peeling paint, which can be a lead hazard, doors that are not secure, windows are not secure. It's not anything outlandish.
No.
And sometimes people try to make it out like, oh, it's going to be ridiculous. I've never seen a VA appraisal come back where we've been like, this is crazy. We're always like, yeah, that makes sense. And it's really not very different from an FHA appraisal. So it's also, it's very similar to most of the loan products.
Yeah. And oftentimes, like as a listing agent, if the property I'm listing is just in too poor a condition for a VA buyer or an FHA buyer or a chaff buyer, any of those buyers, we'll typically note it in the listing so that we don't waste anybody's time. There are properties that might have little things like maybe some peeling paint, maybe a handrail is missing. And with that, we can structure it where if the seller's flexible, oftentimes they will agree to make minor modifications in order to satisfy the appraisal. And if not, then that's a conversation we have up front with our borrower saying, hey, listen, if for some reason these get flagged during the appraisal, because things do, and the seller's not willing to, are you willing to pull up your sleeves and put in a little sweat equity, of course, with the help of the attorneys and the hold harmless and permission from the sellers and all that, but are you willing to do it? And more times than not, they are, because they want the property.
Absolutely. And I think that's also where having a VA literate realtor and a VA literate lender is really important, because as a listing agent, you sort of already have your eyes on that property going, this might be problematic for XYZ type of financing. And if it's easy and you want to give your sellers the biggest pool of applicants possible, you're going to point it out to them and say, hey, we probably want to get this fixed before we put it on the market.
Yes, absolutely. When it comes to my VA buyers, when we write up an offer too, even though you have the ability to exercise the 100% financing option, and you should, because it's an amazing benefit with no PMI.
No PMI, best part.
Best part. However, there's nothing stopping you from putting down a substantial earnest money deposit that you can actually get back. And that just kind of helps reassure the seller that, okay, yeah, the buyer is strong. Yes, we have a strong pre-approval from, a trusted lender. But in addition to that, they're demonstrating that they have the ability to do this.
Absolutely. So. And I think, when you're working with buyers, for me, we keep using the term VA literate. The VA loan program has a couple of differences from regular other types of products. And it's something where if your lender does not have a lot of experience with VA loans, it can absolutely trip them up. I do what's called rescue loans a lot. And rescue loans are borrowers who are under contract with a lender. The lender has made it through underwriting and now can no longer get the borrower any further, because it is often because of something that the lender maybe didn't know or didn't realize. And we will kind of scoop those loans up and then attempt to get them through, because we are a little bit more experienced in VA loans. I do about a quarter of my transactions are VA, which is very high for a lender. And what things can hang people up? Probably the number one thing backing up a VA buyer is if their lender does not take into account childcare costs. It is the only loan program that requires us to use childcare costs as part of our debt to income and residual income calculations. For those of you with kids in daycare, it can be very expensive. So if you're paying $1,000 a month, $1,500 a month in childcare, that can absolutely disqualify you for a loan. Calculating student loans incorrectly, the VA uses a different student loan calculation than most of the other loan programs. Mm-hmm. If they are calculating student loans incorrectly, absolutely can trip a lender up. Certificates of eligibility. So this is a big one. As eligible for a VA loan, we pull what's called a COE. It's a certificate of eligibility. It comes from the VA portal. Not all lenders have the ability to pull those.
Oh my God, the ones that don't, it is such a pain.
Because then you're trying to educate a borrower on how to do it, and they may not.
It takes a long time, and then they can't get a hold of the right person or people or department to get the paperwork, and it delays the process.
Absolutely. We pull them right at the beginning. Some borrowers we're pulling through an automated system where it could take me literally 30 seconds. I plug in information, it pops up on my screen. Some borrowers, especially we find reservists, are probably one of the biggest ones, or people in the National Guard. They don't always have an automated one. And that can be like a 2-week process where we're submitting military paperwork, DD-214s, discharge papers to the VA. We're calling the VA loan center. They're getting this documentation back to us. So if a borrower is not starting this until they're under contract, this can be really problematic because that is actually the document that tells us if you are eligible for a VA loan and how much of that loan is going to be guaranteed. And we have to see that. Have you foreclosed on a VA loan before? What is all the information out there for that particular borrower? And we also find errors sometimes on COEs. It's the government. And so we like to do those immediately. It's actually the very first thing that I do when I get a VA borrower is on the phone with them. Let's pull your certificate of eligibility. And I go on and I pull it just to make sure that it's accurate. So
are you doing this at the pre-approval stage?
I am sometimes doing it before I even have an application.
Wonderful.
In conversation with a veteran, if they allow me to, I will try to pull it because it just allows us to have a more accurate conversation before we even apply. Because sometimes I will see, again, a borrower may not be eligible for a VA loan. So
and they think they are.
Yep. Not all veterans are eligible. So if they are not eligible for a VA loan, again, we sometimes see like, hey, this shows you have an outstanding VA loan. Oh, wait, I paid that off. It's showing on here. Let's get it fixed. It really, if we do that immediately, it just clears the air. We know exactly what we're working with.
Yeah. So can a veteran use their VA benefits to buy a vacation home?
That is a great question. No. So VA loans are for primary residences only. Now, that being said, you can own more than one, depending on how much entitlement you have. If you have you usually need a down payment for the second one. So depending on how much entitlement you have, you may be able to have more than one, but each one must be purchased as a primary. So you can buy a primary, say in state A, and now you're going to move to state B, and you're going to turn that first primary into an investment. That's fine because you bought it as a primary. And the second house is also a primary, but you cannot use it to purchase second homes or investment properties. It's for primary use only.
So when you say investment properties, so you can buy them for multifamilies if you're residing in the multifamily.
Correct. Yep. It has to be your, as the veteran, primary residence.
Okay. Wonderful. Yeah, no, I think that's great. With VA buyers, we were talking earlier about some of the onus that ends up on the seller's plate. Like our contracts state that the seller has to pay for the wood destroying pest inspection.
Yep.
And I just learned something new.
WDIs.
Yeah.
So as of recently, it has actually come that the veteran can pay for the wood destroying insect inspection on their own instead of having the seller pay for it. That is something, and they're not very expensive.
Like $100.
But sometimes sellers had feelings about it. That is something that the veteran can now cover. So it's kind of a nice change. Now, if there is work that needs to be done as a result of the wood destroying insect, that is something that the seller and the buyer can discuss who is going to pay for that work. But the lender would just need the documentation showing that we had both the inspection done. And then if something was found in the inspection, we have the remediation done.
Very nice. Now, I have a question. Once a VA buyer, like they buy their home, they've lived there for a few years, they decide they want to sell it. Are they able to pass on their loan
Yes,
to the next buyer?
They are. So it is one of the few assumable loans. Assuming a loan is a bit of a tricky process. So we always like to warn people that there's a lot of conversations that have to be had if you are assuming a loan. But we do know, people where they have and it can be a great benefit, especially if the seller purchased at a low interest rate time period and the buyer wants to take advantage of that. So yes, it is a loan product. It's one of the very few.
And it's a pretty cool product.
Yeah, it really is. And that's, I think that's the thing that I always really like to get across to both buyers and sellers is that this is a really great loan product. And it is well worth veterans' time to explore this product. A lot of veterans get pushed into conventional loans by uneducated lenders or lenders that don't offer VA loans and just don't, and they will attempt to talk the buyer out of the VA. Oh, you don't really want that. And it's just because they're not offering it and they want to keep the buyer. There are very few times where the VA loan is not the benefit, right? Where it's not going to be the best product for that person. Occasionally it does come up, but it really is a great product to use. And the other thing that's nice as well is, as you know, there's county loan limits for regular loans. 647-200 is the current county loan limit where we are. For a conventional loan, a VA loan doesn't necessarily follow the same loan limit. So technically it's still 647-200, but if they're putting money down, The lender just needs 25% of that loan amount to be guaranteed by the entitlement of the VA loan.
Yeah.
So you can get a VA jumbo loan, which
That's
has
amazing.
much more competitive rates than a regular jumbo loan.
Yeah.
So something that, to keep in mind as well is that veterans are not necessarily limited, like a FHA loan, or again, a lot of other 100% financing loans have low caps to them.
Yep.
I've had VA buyers buy 700, 800, 900. Best one I did was $1 million homes with their VA benefits.
Yeah.
And they can do that.
That's incredible. Just wanted to touch on a couple other things and then we'll kind of wrap it up here. But there's always been this like myth, and I'm calling it a myth because it's not true, that financial institutions that have like the service in the name have the best rates, best programs, and take the best care of our military.
Yeah, I would love to. So there is quite a few lenders that market and target really towards VA buyers. And some of them really market as a military benefit.
Yes.
They are all private institutions. Quite a few of them are credit unions, but they are by no means owned by the military. They are by no means controlled by the military.
People think they are.
100% think they are. And are they sometimes great? Absolutely. However, they don't always have the most competitive interest rates, and they don't always have the most competitive programs. So I really encourage borrowers to do their research, to, if you've been using a credit union that is military based or seems like it is, to just reach out,
doesn't hurt to have
do a little bit of digging, and just make sure that you're really getting the best product, because those programs do kind of prey a little bit on misinformation of borrowers of I'm loyal to these people. This is what I do. And again, sometimes they are the best product for the buyer, but sometimes they're not.
Well, I've noticed, especially with VA, sometimes there's a huge spread with your interest rate.
Absolutely.
And you're the same person, but at this institution, you fall here. At this institution, you fall here. And it's like, absolutely, I don't understand why VA loans have such a big spread.
Yeah, sometimes the credit scores have a really big rate impact, especially for those credit unions. They're looking for a higher tier of borrowers, so they will sort of punish borrowers with lower credit.
So with VA buyers, does the government actually have a set standard?
They do not. So the government does not have a credit score requirement for a VA loan. Most lenders do, to be honest with you. And it only makes sense because we price everything on risk, right? Yeah. However, there is no minimum, but there are other things that come into play, like interest rate and whether or not we can get a qualification based on risk. However, I have seen some credit scores that would not get through other programs absolutely get approved for a VA loan. So it really is a great option. The other thing as well, though, is you can also refinance into VA loans.
I didn't even think about that.
You can refinance into VA loans. So I occasionally get borrowers that start in a different product that maybe makes more sense for their situation at that moment. And then we will refi them into a VA loan. Or I've had borrowers where I just did one not that long ago where I had a wife who had purchased a house on her own with a conventional loan. Her spouse, who she married after the fact, was a veteran. He had not used his benefit. They wanted to do some work to the house. So they refinanced into his VA loan, took some cash out, and then they did some work. And that can be really easy. And then the VA also has something called an IRRRL, and VA IRRRLs are glorious programs. It's called an interest rate reduction loan. It is a VA no cash out refi. It's just for rate and term. And it is the fastest, easiest refinance someone can ask for. So
you're kidding me.
Yeah, it's one of my favorite products. We love them because they're easy. Veterans love them because they're fast, and it can show some big savings in the interest rate boom of 2020 and 2021, where rates were really low. We were interest rating a lot of VA loans and low to mid 2% interest rates for 30-year fixed mortgages. So they really put a lot of veterans in great positions.
That's awesome. And then think about those veterans that end up selling those homes at those low interest rates and the lucky buyers that could potentially assume those.
Exactly. With like 2.5% 30-year rates. It's crazy.
That's amazing.
But yeah, no, great loan product for deserving folks. I would say buyers, if you are eligible, you should look into it, and sellers, don't shy away from them.
No. Yeah, I agree.
Awesome.
Well, thank you so much for watching.
Thank you.
We'll see you soon.